What's up, future CPAs? Welcome back. If you're gearing up for the LCPA, disclosure rules can feel like a total maze. Well, today, we're going to give you the cheat codes. We're breaking down some of the trickiest accounting standards into simple, powerful knowledge that you can use to crush it on exam day.
Okay, so let's jump right in and make this super practical. Imagine you're the head accountant for a cool local tech company, Pinoy Tech Innovations. They just dropped a massive 1 billion pesos on a new factory. Now, it's your job to figure out, how do we get this on the books? This isn't just about a huge number, It's a real accounting puzzle you have to solve.
All right, first things first, we have to tackle the asset itself, that awesome new factory. And for that, our go-to guide is Philippine Accounting Standard 16, which covers everything about property, plant, and equipment.
So, what even counts as PPE? Well, PAS 16 gives us a really clear definition. First, it's tangible. You can actually touch it. Second, it's used to make money, whether that's through producing stuff, renting it out, or just running the business. And the kicker? It has to stick around for more than 1 year. This definition, it's the foundation for everything that comes next.
Okay, the moment that factory is on your books, you've got a massive decision to make. And trust me, this is a favorite topic on the LECPA. Are you going to use the cost model? The straightforward, objective one that just sticks to the original price. Or are you going to use the revaluation model, which keeps the value up to date and relevant, but wow, is it a lot more work to do? This choice seriously impacts how your balance sheet looks.
So this next point is absolutely crucial. You need to burn this into your brain for the exam. If you choose the revaluation model and that factory's value goes up, that gain does not go to your income statement. I repeat, it does not hit your profit. Instead, it goes to other comprehensive income and gets parked in an equity account called revaluation surplus. Getting this right is a huge deal.
Let's be honest. A company like Pinoy Tech probably didn't use petty cash to pay for a 1 billion peso factory, right? They almost certainly got some help, maybe a government grant and a huge bank loan. And that brings two more super important standards into the picture, PAS 20 and PAS 23.
PAS 20 is all about government grants. And here's the exam trick. You don't record the grant when the money shows up in your bank account. Nope. You record it when you have reasonable assurance, which basically means you're pretty darn confident that you'll meet all the conditions and actually get the funds. So think about it this way. You book the promise, not just the payment.
Now, for that bank loan, we turn to PAS 23. This standard tells us something interesting. The interest you pay isn't always just an expense. If that loan was taken out specifically to build a qualifying asset, and an asset that takes a long time to build, like our factory, is the perfect example, then that interest cost actually becomes part of the factory's cost on the balance sheet. In other words, it gets capitalized.
But hang on, you can't just start capitalizing interest whenever you feel like it. PAS 23 gives you a very specific set of green light conditions, and all three have to be happening at the same time. 1. You're actually spending money on the factory. 2. The bank is actually charging you interest. And 3. Construction is actively happening. If you don't have all three, you don't have the green light.
Okay, so we've recorded the asset and we've figured out the financing. But accounting isn't just about making journal entries in secret. It's about communicating. It's about telling the story of the company. So what exactly do we have to disclose to the whole world? Think of this as your disclosure cheat sheet. These are the details you absolutely must include in the notes to the financial statements. For our factory, you have to say which measurement model you used and show how the balance changed over the year. For the grant, you got to explain your accounting policy and spell out any conditions you still need to meet. And for that loan, you have to state exactly how much interest you capitalized and the rate you used.
But hold on, we're not done yet. Following the global standards, the PFRS is just the start. Here in the Philippines, we have our own local bosses, the SEC and the BIR, and they've got their own set of rules you absolutely have to follow.
So now we're adding the Pinoy-specific compliance layer. And a big one is SRC Rule 68. These are not optional. You need a statement of management's responsibility. You need that all-important received stamp from the BIR. And you need to attach detailed schedules for big accounts, like our new factory.
And that SMR, it's not just some cover page you staple to the front. It's a formal, signed document where the top executives, we're talking the chairman, the CEO, and the CFO, put their names on the line and personally swear that the financial statements are accurate and follow all the rules. This is a huge deal for accountability. Phew, we've covered a ton of information. So let's switch gears and boil it all down into a super focused bullet point review. This is the stuff you absolutely need to have locked and loaded for exam day.
Okay, this slide right here, this is your ultimate study hack. Go ahead, pause this, take a screenshot, make it your phone's background, whatever works. These 6 points are the most critical exam-ready takeaways. Just remember, revaluation surplus goes to OCI. Capitalize borrowing costs only for qualifying assets. Recognize grants on assurance, not cash. And for our local rules, the SMR is a must, the BIR stamp is non-negotiable, and you have got to know your key disclosures. Master these, and you're in great shape.
And this last question really gets to the core of why we do all this. All these rules, all these disclosures, they're not just there to make our lives harder as accountants. It's all about creating transparency and building trust with the people who invest in these companies. So when you're deep in your study sessions, always try to remember the why behind the what. It'll help everything click into place. That's it for this one. Now go smash that exam.